Hey everybody, what's going on? It is James here with Crypto Common Sense. It's a little before 6 o'clock Central Time on September 18th, and what a couple of days the market has had. The alts have absolutely rallied like crazy. A lot of people are talking about alt season, and of course Bitcoin has stayed flat. So let's take a look at the charts. Let's see what's going on, and we'll start off with the alt chart. A couple days ago I did a video and I was very skeptical of the alts and their movements, but what I said at the time was that there were a lot of W's coming in. And what I wanted to see was it break this blue line and this red line where we had convergence. This red line was the long-term trend line. The blue line was actually the neckline of our double bottom. And I said that even though I was bearish, that if we broke that barrier, I would have to go long on alts. And that's exactly what happened. We did break the line. I did not want to see it. Even though I've made some good money the last couple of days with the alts that I have, it's just not what I wanted to see. I really wanted to see that get rejected. Instead, what we got was this pump. I still don't believe it's alt season. I still believe it's just one big fake rally, and I'll tell you why real quickly. So if we zoom in on this and we actually measure what this was to me, right? Doesn't look like it on a daily chart, but if we look at this on a 3-day chart, this really to me, well, maybe it was a daily chart. Yeah, I guess we'll use the daily. All right, so let's get rid of the long-term trend line. Let's get rid of the neckline. And what we're going to do is we're going to draw an ascending triangle, which is what I was seeing a couple of days ago that I hoped it wasn't the case. Basically, we had this triangle that looks something like this, right? Ball parking it here, just kind of using trend lines. It looked something like that, and basically our breakout target on that triangle was going to be up around $80 billion. We measure it. We can actually see from the bottom to the neck, right about there. If we pull this up from the breakout, that's going to give us target somewhere around 80 to 85 billion, 80, 84 billion, somewhere there. And what we did was so far, now assuming that we don't keep going up, so far it's exactly what it did. It came up and hit that breakout target, and we've got this big, nasty looking wick sitting there. Now there's still a little over an hour to close, so a lot can happen in that time, but that almost looks like it's running out of steam already. If we look at individual alt charts, which I'm not going to go through all of them today, but if we go through the individual alt charts, we're seeing a lot of the same thing. This was the Litecoin that I was talking about for last week, saying that it looked so damn good. I just didn't want to go long on it because I was concerned that Bitcoin might dump, and if so, that it would pull Litecoin down with it. So this is one that I did miss, even though I talked about it, even though the chart was there. I let my bias cost me a good trade. Just full disclosure, I did not take the trade. I said I would, but I didn't, and I just chickened out, and that was just really dumb on my part. We had this beautiful W come in, right, and then we had another larger W on top of that. Bam, 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 right? So anyway, you got this. This was a good trade. It was sitting on the long-term trend line from back in December. It was coming down. It was inside of my reload zone between the 61.8 fib and the 78.6, and it was putting in beautiful market structure with a nice, beautiful W. On top of that, we also had beautiful bullish divergence coming in. So just 3 or 4 different reasons I should have taken that trade. At the very least, I'll tell you what, as a trader, what you sometimes want to do. If you're in a situation like this and you just don't feel good about a trade, sometimes the best thing you can do is just take a small position. So for example, instead of buying back all of the Litecoin that I sold, which was a little over 30% of my portfolio, it would have made sense for me to just take a small nibble, maybe like a 5% position here, and then put a stop loss down underneath this candle here. So I could have had a stop loss down around $67, right? And I could have entered on the breakout of this neck, or if I was super skeptical like I was, I could have waited for it to come back down and retest that neckline, which it did there, and entered somewhere around here. I did consider entering this at $70. I just didn't like the way Bitcoin looked. Bitcoin is overdue for a dump, and that's really coloring a lot of my other decisions, and in this case it cost me a lot of money. This is actually about a 20% pump off of that neckline. Is still a good 10-15% if I remember right. Like right now it's up about 13.8%, topped out over 16%. So again, could have went in with 5% of my portfolio here with a stop loss down underneath this neckline, and or I could have entered here on the retest. Several different places I could have stuck 5% in, and I would have been fine, right? Would not have gotten stopped out. Would have got me a really nice gain, 10-15%. And, if you're going in with 5% of your portfolio and you get a 10% trade, that's about a 0.5% total increase in your portfolio, which is actually really good, right? 0.5% of your entire portfolio is a nice trade, and very, very low risk. If you're doing a 2-to-1 risk reward and you're only using 5% of your portfolio, at the absolute most, you're going to lose a tiny, tiny little percentage. So should have took the trade, didn't. That's life. But again, same thing with this. If we draw a target on this, if we say, hey, let's measure the price range. This was an ascending triangle. I pointed this out in a video a couple days ago. I had around a $9 target. So if we measure that up, $9 on top of that, that's going to give us a target right around $80. And of course, this topped out at $80.26. So I do think it's played out. We'll see, right? We'll see. There's still room on this daily chart. The RSI still has room to breathe. But if we start looking at the 4-hour chart, the 1-hour chart, etc., a lot of these are overbought now. So that could be the quote-unquote alt season, right? I personally just think it's a dead cat bounce. So we'll see how it's played. I've obviously been taking profits as a result of that. Like my OMG, I think I've talked about this in past videos. I had a lot of OMG I was holding. It actually pumped about 20%. So obviously that opened up some profit-taking opportunity there. Stellar actually pumped over 50%. I think it was closer to 65%. So that was some profit taking there. Got tongue-tied there. This daily candle is just ridiculous. Look at this thing, right? Whoa, look at that, 52% in a single day. That's just crazy. And what you'll get is you'll get a lot of people who start buying now. They're going to start FOMO again, like, oh, I should buy Stellar. It's going to the moon, right? Look at what happened the last time I had a big pump like that, right? Back in May, had a couple of days like this, bam, big old pump. Everybody got excited. It got all the way up to 16 cents, and then down it went, right? So again, I'm taking profits. Maybe I'll regret that. Maybe not. Time will tell. Let's talk about Bitcoin. I'm not going to talk a whole lot about Bitcoin's smaller time frame today. I want to talk about the bigger picture and kind of fill you in on what I'm seeing here. So we're going to get rid of RSI. We're going to get rid of volume. And we're going to look at a couple different moving averages. And then we're going to look at Wyckoff logic. So this is our 50 moving average. This is a simple moving average on the daily. Again, this is considered the quote-unquote thermometer or the gauge for a bull market. It's supposed to stay above the 50 moving average on the daily in a bull market. You can see that it did that, right? Once we broke above it way back in February, it never went back under it. Just peaked under it a couple of times here, but quickly shot back up above it. And really now, if you look, it's been acting as resistance. Bam, resistance, bam, resistance. Had a break above it, but again, resistance, resistance, and we've just stayed under it. We haven't even bothered to retest it. That is extremely bearish. Don't let anybody tell you differently. That is bearish. If we look at the EMAs, right, we're only going to look at 2 EMAs. We're going to look at the 12 and the 26. Again, these are what you want to watch. Typically, when you're in an uptrend, you're going to be riding on top of these EMAs, right? When you get underneath them, you're typically going down, and we are now underneath them. And again, you can see right here, this is a daily candle. It is acting as resistance. Got soundly rejected when we came up to test that today. All right. So we are technically, in my opinion, in a downtrend. Let's get rid of that one. Let's look at the 4-hour chart. On the 4-hour chart, the one that I like to pay attention to is the 200 moving average. You can see that, again, this acts as resistance and support quite a bit, right? In the bull run, we pretty much stayed on top of it the whole time. And again, we've fallen underneath that as well. That is sitting at right around 10,216. Again, it's acting as resistance. All those are very bearish signs. Now, on the weekly chart, if we take a look at the 12, it has simply been the thing keeping us afloat. We have come down and tested it back on July 15th. We tested it the week of July 22nd. We tested it the week of July 25th. We tested it August 12th. We tested it the week of August 19th. We tested it the week of August 26th. We broke through it on the week of September 2nd. We tested it last week, and we've already tested it this week. And if you've listened to my past videos, you know that me personally, I believe the more times a line of support or a line of resistance is tested, the weaker it becomes. And you can see each time we test this, our bounces off of it are getting weaker and weaker and weaker. In my opinion, it's only a matter of time until that thing collapses and we see finally the correction that I've been dying for now for 5 long months. Well, really 4 months since May. I really felt like we needed a correction as soon as we got up around 6,000. I was way early. Fortunately, I didn't exit all my positions way back there, but I was, watching carefully, thinking that any minute we would be falling. That was actually back in May is when I started transferring funds from my bank over to my exchange accounts so that I could accumulate more Bitcoin. I just haven't done so yet because, again, I buy on retracements. I don't chase markets. All right, so let's take a look at some wick-off logic real quick. I'm going to draw this up. I'm going to show you two possible scenarios. I'm going to show you the bullish scenario, and then I'm going to show you the bearish scenario. But I want to start with the bullish because I'm a bear and I have a bear bias. So I want to be fair to the bulls and say, look, there is a possibility that this is indeed reaccumulation and that this is not distribution. So if we take a look at Mr. Wickoff's logic, I'm going to pull it in just a second here. Let me grab it out of this other window. We're going to take a look at the accumulation schematic number 2, okay? And I'm going to try to get this a little smaller so you can see it at the same time. Hopefully this works out in the video, okay? I do think it's feasible, okay? Not likely, but feasible that we are actually in this section here of accumulation or reaccumulation where we come up. The reason that I think this is the least likely is because in this you're supposed to be making, right, consistently higher highs and higher lows. If you go down in the picture, it doesn't look that way, but if you actually read about Wickoff logic, higher highs and higher lows are one of the things you're supposed to be seeing. And we're not seeing that, but still, it's very possible, right? It is possible that this is where we're at, that we're going to go through this reaccumulation here and that we are going to skyrocket up higher. I think if we break north, if we truly break north, not on a bull trap, but if we truly break north, I do think our next target is up around $19,000. So you're not going to hear me calling about ridiculous targets like $20 million or $1 million, or not 20 million, sorry, $1 million, not $50,000, none of that nonsense, right? If we break north, a feasible target is going to be up around 19 grand. That's going to be feasible. And again, the way that you figure that up, that's not a number I pulled out of my ass. Like a lot of these guys are like, oh, $1 million might happen. Yeah, it might. And pigs might fly. If we are going by technical analysis, how do you come up with that target of 19,000? You simply measure the move from the bottom to the top, and then you bring that over and you line up the bottom of that with the low here, and there's your target. You can see that gives a target of right at 19,800. And if you look, it lines up almost perfectly with the old top, so I could certainly see that being a case. Suddenly we put in this giant double top, right? Again, if that happens, I would expect that we would have some type of major retracement after that. What type of retracement? Very, very tough to say. It could be a retracement that looks like something like this, where it comes all the way back down to this $9,500 level, which will be a 61.8 fib. It could be a retracement where it goes something like, well, I should have just left that up there. It could come all the way back down to this 78.6. That would just be one giant parabolic move that retraces all the way back down here, fills in that $8,500 gap, etc., etc. Could look something like that. Or it could be that we just never fill in that gap, which, again, unlikely, but very, very possible. Anything is possible. Could be that this is our next move. It looks something like this, and that when it retraces, if it retraces, that it simply comes back down to this $13,000 or maybe down to the $11,000 area, and this becomes our new reload zone, right? All of those things are possible, but unlikely in my opinion, okay? My opinion is that we are indeed in a descending triangle, which you can see here. It does have a breakdown target of down around $4,200, which again lines up with that old neckline. We've already talked about all that in past videos. So what I want to talk about today is the Wickoff logic, right? How does that compare with Wickoff's logic? If we look at this, I'm going to actually mock this thing up real quick. Okay, this is what I think This is what I think is happening. It's what I think we're seeing right now. I think that this first peak, try to get all this on the screen at the same time here. It's going to be tricky, but I think I can manage. All right, so I think this first peak is actually our BC, and that stands for buying climax. I think the second peak is ST, which stands for secondary test. I think this dip here is actually AR, which stands for automatic reaction. Basically, it's a sell-off you get after the top here. And then I think this right here is our signs of weakness, which is what you see here, the SAL, right? Signs of weakness. Now, you might be looking at this picture going, James, that UT goes higher than the BC and the ST. So that's not what we're in. But you have to understand that this is just a general guideline. If you actually learn about Wickoff events and you actually read about them, that is not a requirement. In fact, if we zoom down here, you can actually see right here, it says that often demand is so weak in a distribution trading range that price does not reach the level of the BC or the initial ST. In this case, phase C's test of demand may be represented by UT of a lower high within the trading range, meaning that the upthrust, this, could actually be a lower high, which it is in our case. Then you can see that's followed by what looks to be a head and shoulders or an inverse head and shoulders, down, up, down, up, down, up, right? Down, up, down, up, down, up, right? And then you have consolidation and a little dead cat bounce before a drop down. Now, I think it's very possible that we're in two different parts of this, that we're either right here in this area, right before phase C, and that we have another pump to go. By the way, that would line up with some other technical analysis that I've seen, calling for one last pump to 11,000 before we finally drop. That's the Elliott wave guys are talking about that. I don't know enough about Elliott waves to really comment on that. They could be right, they could be wrong. I really don't know. I know enough about Elliott waves to spot like an ABC correction. That's about it. I don't know about the all the 1, 2, 3, 1, 2, 3, 4, 5 and all the different XYZs. I'm not up to speed on that. I can't comment. But they think we're going to go up to about 11,000 before we drop. If so, that would line up with this. It would mean that we're actually right here and that we haven't yet reached the last point of supply. Okay. The other thing that I think, the other scenario that I think is possible is maybe we're already in phase C. Maybe what we're seeing right now is actually the last point of supply and we're getting ready to dump. This would make more sense to me. It doesn't look quite as in line with the picture. If you're going just by the picture, which again is just a general guideline, it looks more like we're in this area, okay? In which case, short term, we probably got another leg up to go, maybe up to 10,500 or 11,000. Very possible. A lot of times what you'll see is this last point of supply ends up becoming a bull trap. So that would make sense, right? If we go up to 11,000, it would be a false break out of our descending triangle. A lot of people would start going long. And then, of course, if it dropped, that would make total sense. So I think we're in one of these, we're either right here or way up here in this wick-off event. Time will tell which one. But for right now, I'm not in any open swing trades, short or long. I'm just simply waiting. This thing has been ranging in a $50 to $100 range now for a couple of days. It's just not what I want to trade. There's not enough meat on that bone. I'd rather wait for a convincing break one way or the other. And again, if this thing breaks north, right, and hits the top of this triangle, that'd be up around 10.5, 10.6. I could see that happening. I could also see this being drawn like this, right here, where the top is closer to 10.7 or 10.8. Or if you go to a weekly, I think it's even a little higher than that. No, I think that's it. I've gotten here lately where I really like the closes a little better, drawing this thing in the closes. It's touched here, it's touched here, it's touched here, right? It looks more legitimate to me. So that's kind of how I'm going to draw it from now on. That does change our breakdown target a little bit. If we're going from that close down to this line here, it's about $3,500 or $3,400. If we bring that down, instead of having a target of 4,200, that would change our target to about 6,000. Not a bad target, right? That target still makes sense because that was the line of support all through 2018. So I'll definitely be looking to ladder some bids in that area as well. Be saving some, powder for the 4,200, but 6,000 look really, really good to me on this thing. But for right now, I'm still a bear. Long term, short term, if we do start to break north, I may look to enter some type of long position, right? I'm so used to saying short. Some type of long position on a swing trade to play it up to the $11,000 area. On the bigger time frame, though, for me to go long on a position trade, meaning that I put my money back in the market, we're going to have to reach much, much higher. We need to reach up to 11,700. And if you're wondering why, it's just got to do with a particular setup that I use that I was taught by a 30-year veteran. It's called a breakout trade. It looks something like this. And essentially the way this works, I have a template set up for it. It looks something like this. And when price gets up to the 25 level, it acts as an entry alert. So if price gets up to this level, right around 11.7, that acts as an entry, and then it gives me my automatic targets. It gives me a stop loss here, profit target here, profit target here, and profit target here. Okay. Without explaining that in detail, essentially that's the way it looks. That's my level. 11,700 is where I would start looking to go long on a position trade. Up until then, just looking for day trades and swing trades. And right now, I'm not even looking for day trades. Right now, there's not enough meat on that bone. There's not enough moving in the market. Moving up and down 0.5%. No thanks. I'll wait. I need at least 1 to 2% moves to make day trading worth the effort. So for right now, I'm sitting on the sidelines and I'm watching. So with all that being said, that's kind of where I see the market at again. The alts have looked really good the last couple of days, but I still believe that is a dead cat bounce. So me personally, I'm taking profits on those. I'm not going to be caught holding those. And if I'm wrong, then I'll have to re-enter a little higher. But typically, when you see these types of breakouts, you're going to see some type of retracement afterwards. So that's what I'm watching for. And again, I believe that if Bitcoin does start to finally correct and finally go down to those lower levels that I've mentioned over the last couple of months, I believe that it is going to pull a lot of the alts down. I mean, when you look at an alt like this that goes from being oversold a couple of days ago to suddenly we're overbought, that's too much too fast in my opinion. With all that being said, please remember I am literally some guy sitting in a spare bedroom. I am not a professional financial advisor. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel if you haven't already. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.